Every time the sales gong rings in the office, some salesperson becomes the revenue hero. But that gong sound, all that means to your finance team is the hard and difficult task of collecting money has only just begun. My name is Anthony Venus. I'm the CEO and co-founder of YayPay. We use machine learning to automate your receivables and collections management, and we're turning those finance teams into the revenue heroes. Because these teams are spending hours each day on manual, repetitive tasks for collections and dispute management, like sending out all those email reminders and phone calls. The sheer amount of work involved is just crushing. When it comes to forecasting receivables without the data, it's nothing more than guesswork. And without the right collaboration between the customer, sales, and finance, finance is held hostage to a world of late payments and inefficiency. So, YayPay is making big changes in the back office. It all starts here with the data. So imagine your finance teams are dealing with thousands of outstanding invoices. To them, each customer looks pretty much the same, like the dots here on this chart. It's hard to see who's going to pay you faster or slower, who's most at risk, who's least at risk, and what happens is they spend too much time on those customers that will pay you anyway, and not enough time on those that are most at risk. So with YayPay, we segment those same customers by payer behavior. And with that, we're able to serve up the most appropriate messages and the most appropriate incentives to encourage faster payment. We use that same data to give you an accurate receivables forecast. We start by integrating all of your receivables data from your ERP, CRM, spreadsheets, and emails all onto one centralized accounts receivables CRM, connecting the payments workflow between sales, the customer, and finance. Your customer clicks on a simple statement link, downloading invoices where necessary, raising disputes, and making payments using one of many convenient methods. With automatic payment communications, we put your cash collection on autopilot. No more emails and phone calls because our software is doing all the work for you automatically behind the scenes. That's why in the last 7 months since launch, we've helped customers just like this collect $150 million, 20% faster. With an investment team with Fifth Third Bank and QED, coupled with a leadership team with years of experience in enterprise software development and financial technology, we're now working on a multi-billion-dollar opportunity to rewrite the operating system for back-office finance. But if you're wondering what YayPay really means, it's the joyful sound you make when you get paid. Thank you. Hi.
Great presentation. Thanks for being here. Let's talk about selling to accounts receivable. In my experience, it's not a department that has a ton of budget, even though obviously it's integrally tied to revenue. So how do you break through the inertia and the sales cycle of selling to this back office function?
Sure. So 9 times out of 10 is an existing process of spreadsheets and people. So we sell into, depending upon the size of company, we're selling in from any company that's $10 million up to $1 billion. And we find for companies that are under $100 million, the conversations with the controller and the CFO, then a level down. So we're kind of selling up and selling down. But we move up to further up the chain, it tends to be a head of receivables and different budgets that we're working from. So the value prop we're selling is reduction in DSO by about 20%. And also, though, the value prop for some companies is just simply automation and saving on headcount. But yeah, we're doing that through direct sales, but also through partnerships with banks and ERPs.
You discussed your value proposition as getting money in 20% faster.
Correct.
However, part of what the AI and the machine processing is doing is trying to determine who's a late payer, right?
Correct, yeah.
So how are you, is it using incentives to getting the money in faster, or is it just determining in the pyramid, where you should be spending the incentives to get the money in?
Yes, it's a bit of both. It's using incentives, but it's also, frankly, just communicating more often and sending out particular types of messages for particular types of customers to also get reactions and payments. So we also monitor if people aren't opening those emails in the first place. It could mean one of two things. They're not engaged or they've left the company, and that also helps us as well inform our supplier customers what's going on.
You shared some statistics and you showed us some clients. Tell us a little bit about the customer experience and how quickly a new user gets up and going and they're proficient.
Sure. It's 30 days from the sale to integration, and we're connecting with QuickBooks, Intact, and NetSuite. We're also, though, doing some larger integrations with Oracle and SAP customers, but our prime market is actually on those ones where we build connectors with. So it's 30 days to get going, and that's all about integrating the data, training up the staff on how to use it, and so forth. And of course, our goal is to bang that down further as we progress.
You must look at the historical data of how long it took particular parties to pay in order to build the engine of saying how many times I communicate, et cetera. So it seems as if the value add to a customer would come over time, or else it had to be a prior vendor or prior purchaser.
Correct, yes. The software gets smarter as time goes by. It does, yeah. Great job. Thank you very much. Thank you.